Signature Bank was completely solvent. They were the leading bank for the crypto industry, and they got murdered on a Sunday. On a Sunday, not having any issues with their balance sheet. They were one of the better banks, and that's what happened. So let's not pretend this had anything to do with the crypto industry, but this gives us a little glimpse into the future of all the FUD that we're going to be seeing coming back at us once again. All the narratives. We're going to get the North Korea one. We're going to get the only for criminals one. Bitcoin mining is going to start boiling the oceans again. Get ready for it, because the circulation, the game of musical chairs of fear, uncertainty, and doubt about our industry is coming. I'm going to go on record as saying I've been wrong about the likelihood of the Clarity Act passing. I kind of superficially listened to what I was reading, but the more I dig in, I'm not going to say there's no chance it gets done. I'm going to say it's extremely unlikely that it gets done now.
Bitcoin didn't react to regulation this week. It exposed who really controls the financial system. Scott Melker, widely known as the Wolf of All Streets, frames the week's market narrative around a political failure that carries deeper implications for Bitcoin. You're not just watching a delayed bill, you're watching the limits of regulatory theater collide with financial reality. The postponed markup of the Clarity Act exposed that much of the optimism priced into the market was built on assumptions that were never structurally sound. What stands out is the contrast Melker draws between perception and intent. While viral narratives warned of an all-encompassing crypto surveillance regime, the real story is fragmentation, lobbying pressure, and conflicting incentives. Stablecoin legislation moved forward smoothly because it strengthens dollar dominance and absorbs unwanted treasuries. Bitcoin, by contrast, sits outside that system, which is precisely why it remains controversial and attractive. Melker's breakdown highlights a familiar pattern you've seen before. When banks sense capital flight risk, fear narratives return. Signature Bank's collapse is reframed, not as mismanagement, but as a warning shot. From here, the recycled playbook emerges. Bitcoin as a criminal tool, Bitcoin as an environmental threat, Bitcoin as systemic risk. The key signal for you is not the bill itself, but the reaction to it. When policymakers struggle to reconcile innovation with control, Bitcoin's neutrality becomes clearer. The growing divide between political intent and monetary reality reinforces why Bitcoin continues to be positioned as a hedge against institutional instability, not because of regulation, but despite it. If this breakdown changed how you see Bitcoin and the power struggle behind crypto regulation, drop your thoughts in the comments, share it with someone who needs to hear this, and subscribe for more signal over noise. Now let's enjoy the video.
Story of the week is the botched attempt to get this bill done. Senate committee postpones crypto bill markup following Coinbase pushback. The fact is, Jake Travinsky completely unpacked all the nonsense that's happening around it. It caused me to do a much deeper dive, to ask a lot of people closer to the situation what was going on. And it seems like we were sold a fake bill of goods the entire time. And to be quite honest, I was 100% convinced, like everyone else, that the Clarity Act was a foregone conclusion, that we were going to get that done. And the more I talked to people close to it, they said there was never literally a chance, and this has always just been political posturing. Of course, the Genius Act was easy to pass because stablecoins are not controversial, and stablecoins actually help hyperdollarization around the world. They're good for the United States government because they are a way for people all over the world to get access to the dollar, which means that they're exiting their local currency and they're using the dollar more, which obviously is more dollar adoption, all while being backed entirely by Treasuries, which are hot steaming trash that nobody left on the planet wants to buy. We've all seen the chart. James Lavish, I think, brought it up on Monday. The chart that says that central banks around the world are buying gold more than treasuries, the first time in decades. He even said they're inverted. And for anybody who doesn't know that joke, it's from Top Gun, and you're probably too young. But yes, we were inverted. We're inverted. So central banks don't want to buy treasuries. So who does? Well, Tether, right? And so it makes sense that the Genius Act was passed. And now it makes sense that the banks, realizing they made a fundamental error by allowing those rewards, aka yield, are trying to slide that right into the Clarity Act. But there's a number of reasons right now that the Clarity Act seemingly very unlikely to pass. Yes, we did get news that they're back at the table and they're talking today. This isn't because of Coinbase. Coinbase, I think, gave everybody an easy out and a reason to say, hey, we're not going to do this markup right now. But if you actually took a look, the Agriculture Committee's markup wasn't even happening for a few weeks. So the narrative that this was going to get marked up, voted on, and done right now was false. Anyways, there's a lot of different parts. There's bills coming from the Congress, from the House. There's bills coming from the Senate. There's 130 proposed amendments around it and a number of other fundamental problems. Listen, obviously, the one we haven't even talked about at all that is the quiet part that nobody is saying out loud, even when I talked to Jake before, the Democrats, it's a non-starter for them that in the Clarity Act, they will get some sort of language that prevents the Trump family or any politician and their family from participating in the crypto industry. They are not going to pass a bill, apparently, from what I've heard, that says that the behavior that's happening right now is okay. Donald Trump has explicitly said that he will never sign a bill that has an ethics rule in it and that prevents him or his family from participating in the industry. It is a non-starter for him. Tell me, in what world we get an agreement on that between those two entities? Do you think that the Democrats, the 7 of them that are required right now to vote for this in the Senate, are going to pass a bill that allows Donald Trump to launch meme coins willy-nilly in the name of every single member of his family, probably his dog and his pet golden toilet? No, that's not going to happen. So that's a non-starter already. Of course, then we also have an outright ban effectively on DeFi that nobody in the crypto industry is going to support. And now language that was just added, as Jake said in the last week, about banning the tokenization of assets. You have Paul Atkins on one side with Project Crypto over at the SEC talking about the fact that by the end of 2026, everything will be on blockchain rails and be tokenized. You have the DTCC receiving a no action letter from that very same SEC saying, well, now we're allowed to tokenize everything. We're going to go 24/7, 365 all the time on like the crypto industry, and everything will be tokenized and traded on these rails. And then you look at the language of the Clarity Act and it says, well, we're banning the tokenization of those assets. Do you think that that's something that's going to be easy to reconcile right now? So what I think we actually have is yet another example of gratuitous gaslighting from the United States government about the intentions of a bill. Do you guys remember the Inflation Reduction Act? Last I checked, that was an act to spend trillions of dollars and to increase inflation. But guys, if we call it the Inflation Reduction Act, the dumbest people on the planet will believe that we're going to reduce inflation, right? This clearly, I don't think it was the original intention of the Clarity Act, but clearly it has become a way for the banks to gain control of the crypto industry for the next 100 years and to make sure that we actually can't do any of the things that we were hoping this bill would give us clarity on and protect us from. Brian Armstrong made it very, very clear. Why would the crypto industry want a bill that effectively bans DeFi, says that every time you get a self-custody wallet, you need to KYC and AML, every one of your transactions is going to be reported? Sounds very, I don't know, Chinese. And the fact is, nobody in the industry wants that, and the industry doesn't get to vote. The politicians do. So now we have to depend on politicians actually caring about these things and believing in them. The reality is that we just have a bunch of banks that have realized that crypto is really, really bad for them and want nothing to do with this bill. And do you think that the crypto lobby can touch the banking lobby? Do you think that Brian Armstrong is as wonderful as it is that he got this killed? Do you think that he really has the power that Jamie Dimon and his friends do? I don't think so. Let's take a look really quickly at what the Bank of America CEO said. Bank of America CEO says up to $6 trillion could migrate from U.S. banking system into stablecoins if interest-bearing stablecoins are allowed. Think about that statement for a second. People might actually go to a better product if we give them the chance, so we better stop them. That's what he's saying. He's like, we are totally screwed if people make the move to stablecoins and are actually given the yield that we've been collecting. This is very clearly saying the banks want to keep doing what they're doing that's bad for you. And if there's something better that's good for you, we are not going to allow it. And this is what is happening behind the scenes when the government is talking about the Clarity Act.
Bitcoin is once again being tested, not by markets, but by politics. The political tone around crypto is shifting, and Scott Melker's commentary frames this change as a critical signal for Bitcoin. Anti-crypto rhetoric is resurfacing ahead of the U.S. midterm elections, with lawmakers once again labeling digital assets as systemic risks. That shift suggests the brief period of regulatory calm is fading, reintroducing policy uncertainty that historically strengthens Bitcoin's appeal as a hedge against political cycles. Political turnover remains central to the outlook. Midterms frequently reset power in Washington, and renewed influence from outspoken crypto critics would likely slow or derail constructive legislation. The Clarity Act, once viewed as inevitable, now appears increasingly fragile, reinforcing the reality that Bitcoin's long-term thesis cannot rely on regulatory goodwill. Melker's analysis also challenges the narrative surrounding past bank failures. Silicon Valley Bank and Signature Bank collapsed due to interest rate mismanagement and forced exposure to underwater treasuries, not crypto activity. Signature's shutdown, despite solvency, highlights how crypto-friendly institutions can become political casualties, amplifying the case for a non-sovereign monetary asset. At the same time, familiar fear narratives are returning as Bitcoin regains momentum. Despite this, market structure tells a different story. Strong ETF inflows, rising institutional exposure, muted retail participation, and a muted price reaction to unprecedented threats against Federal Reserve independence all point to Bitcoin quietly strengthening as fiat credibility erodes. Let's get back to the video.
Yesterday, Senator Blumenthal said that we need to slow down because crypto is such a massive risk to the system and we're being irresponsible and it should have no place in our finance. The anti-crypto army is alive and well, and they may have been laying dormant, but they're starting to get really confident ahead of midterm elections. And I definitely fear that this Goldilocks period where we don't have a government that's fighting against our industry is coming to an end. We all know, regardless of your political beliefs, that every time you have one party controlling the government for 2 years in midterms, at least the House switches. It's just the way it is. It's really easy to throw hate from the sidelines. It's really hard to govern. And eventually things switch. We get gridlock, which may be a good thing. And we have both parties vying for control. That's probably coming. But if that comes in the Senate, it means that Elizabeth Warren is once again the head of the Senate Banking Committee. And we have public enemy number one in control of the future of our industry. So if we do want the Clarity Act done, we want it done now. But Blumenthal made outrageous claims like that the crypto industry and the speed of crypto and all these things were the reason that Silicon Valley Bank, Signature all failed years ago. The gaslighting is absolutely insane. Either he's a complete dumbass or he's just willfully lying to you. But that is a complete rewrite of history, and we cannot allow the FUD to rewrite the facts of what actually happened. Silicon Valley Bank failed because the United States government handled interest rates poorly. And because there are laws that force banks to hold a certain amount of treasuries, and those treasuries were massively underwater, which screwed up the balance sheets of all of these banks. We know that this had nothing to do with the crypto industry. They used it as an excuse to go ahead and murder crypto banks while it was Sunday and nobody was looking. Signature Bank was completely solvent. They were the leading bank for the crypto industry, and they got murdered on a Sunday. On a Sunday, not having any issues with their balance sheet. They were one of the better banks, and that's what happened. So let's not pretend this had anything to do with the crypto industry, but this gives us a little glimpse into the future of all the FUD that we're going to be seeing coming back at us once again. All the narratives. We're going to get the North Korea one. We're going to get the only for criminals one. Bitcoin mining is going to start boiling the oceans again. Get ready for it because the circulation, the game of musical chairs of fear, uncertainty, and doubt about our industry is coming. I'm going to go on record as saying I've been wrong about the likelihood of the Clarity Act passing. I kind of superficially listened to what I was reading, but the more I dig in, I'm not going to say there's no chance it gets done. I'm going to say it's extremely unlikely that it gets done now. But the real kicker, I don't think I actually want it to get done right now because it is a bill that's LARPing as something to protect and give clarity on the crypto industry. That's actually an outright attack on our industry once again. Moving on from the Clarity Act, we do have more politicians saying politician shit. Democrats slam SEC over crypto pay-to-play concerns. The Democrats are mad at Paul Atkins because he dropped enforcement actions against almost every company in the crypto industry. And so Democrats are saying you only drop these enforcement actions because these dudes donated a whole ton of money I don't know. I think this is the way that the government works. You should take a look at the banking lobby and the healthcare lobby and basically every lobby and how things get done in this country. Yes, the crypto lobby stepped up massively, but there wouldn't have been a crypto lobby if not for the insane policies of the past administration and because Gary Gensler was a heaping douche canoe. Sometimes I wish that we could have Gary Gensler back, though, because I was able to effectively make a career mocking him, making Mr. Burns excellent. The guy looks like Mr. Burns, right? And what is Gary Gensler doing now? I wouldn't be surprised if Gary Gensler is literally like a consultant for some crypto company and we just haven't seen it announced. But the fact is, we only got a crypto lobby that gave millions and tens of millions of dollars to Donald Trump's campaign and started becoming politically active because it was do or die. Literally had to do all of these things just to not be murdered by the United States government. And so for the Democrats to say that it's pay to play, well, yeah, they all donated, but they donated because what was happening was completely unfair. So to reset the framework back to, oh, it's fair, doesn't seem like pay to play. It just seems like they're being reasonable. So we obviously also have to discuss price action today and what's been happening in the market. We did have a little bump for the crypto space. I don't have CoinMarketCap up right now. I'm going to try to do it running this on my own. We got CoinMarketCap right here showing that the Bitcoins up to about $95,378 this week, down about 2% on 24 hours, but up 5.66%. What's notable is if you actually take a look at the chart, which we're not doing right now, you'll see that we had a massive spike in volume, some fundamental moves, and it's been emboldened by a whole lot of new buying. So we had over 130 billion flows into crypto market in 24 hours. But maybe more notably, Bitcoin price climbs above 97, not anymore. 1.7 billion ETF inflows surge. We have seen massive buying of the ETFs. A lot of that has been in assets other than Bitcoin, actually. I know that Ethereum has absolutely been raging. But clearly there is a renewed appetite right now for the institutional side, or at least the securities side products that give you Bitcoin exposure. So we have a few kind of bullish narratives in my mind that go along with this, right? You have all of these inflows coming. We have a different behavior. If you take a look at the markets right now, since January 1st, we've kind of talked it to death, but we don't get the 9:45 a.m. sell-off every single day. We don't get the massive outflows. We don't have the on-chain metrics showing that whales are selling anymore. Something has fundamentally changed. Bitcoin has risen, but to some degrees, altcoins have risen more, right? I mean, Ethereum has performed well, Solana has performed well, XRP has performed well, all of them breaking above their 50 MAs. This is one of the first times in a long time, I should say, that when Bitcoin has risen, everything has sort of floated up with it. So it feels a little different. And I think these inflows support the idea that we might be seeing a bit of renewed bullishness. But we also saw some comments from on-chain analysts that retail is completely gone. They're not participating in this at all. It's been largely these institutional products, but actual spot buying of Bitcoin by retail has been exceptionally low. To me, that means it's an opportunity. We know that they will always come back. These are bottom signals and not top signals.
What ultimately stands out is the widening gap between political narratives and market behavior. While regulatory pressure and fear-based messaging are resurfacing, capital flows tell a different story. Institutional demand continues to absorb supply through ETFs, price reactions to political shocks remain muted, and volatility is being met with accumulation rather than distribution. That divergence suggests confidence is shifting away from policy outcomes and toward structural realities. Bitcoin is being treated less as a speculative asset and more as a response to institutional fragility, fiscal uncertainty, and declining trust in traditional systems. The absence of retail participation further reinforces this dynamic, historically aligning with early cycle positioning rather than excess. As political noise intensifies, the market appears to be quietly repricing Bitcoin not on promises of favorable regulation, but on its ability to function independently of it. In an environment where monetary credibility is increasingly questioned, that distinction continues to shape how capital allocates risk. Is Bitcoin being repriced as a speculative trade, or as insurance against political and monetary instability? Drop your thoughts in the comments, share it with someone watching the same signals, and subscribe for more clear-eyed crypto analysis.